Let's dig into the post-Fed market moves. For that, we have Komal Sri-Kumar, president of Sri-Kumar Global Strategies. We'll talk a lot about, get into the weeds with the Fed and the move itself. But we also have Darrell Cronk, chief investment officer of Wells Fargo's Wealth and Investment Management business, also president of the Wells Fargo Investment Institute. I want to start with you, Darrell, just for market reaction. So the Fed cut by a half point. Can we just count on 500-point a day gains in the Dow between now and the end of the year? Is that what we get now since this happened?
It would be nice if it was that simple, Joe, but I don't think so. I do think you get a little bit of relief rally off of this because...
Relief from what?
Well, relief from this. There was still concern about a hard landing, right? And so the fact that we went big, right? Chair Powell told us that he needed confidence before he was willing to cut interest rates, confidence in the data.
So once inflation data.
Yeah, once you get confidence, you go big, right? That's why they went 50 basis points this week. That's as big as they were going to go. They weren't going to go 75. You know, all the debate was between 25 and 50. And I think 50 was the right move. They should have went, in my opinion, in July, and they didn't.
Maybe looking at it like that, it's 25-25. I guess it's not that crazy. But I could definitely do a high school debate from both sides, Sri. Put me on either side of what they did. We worked hard to get the rates back to where they were normal, and in case there's a slowdown coming, which, I mean, you wouldn't say this is a slowdown, where the stock market's at all-time highs and unemployment is still very low. This is not an emergency situation for 50 basis. So we worked hard to get that dry powder. What's the point? Why are we doing this here?
Powell called it a recalibration, Joe. I don't think it is recalibration. This is big easy here.
Yeah.
Because in terms of what he was doing, he was trying to make sure that the stock market did not get disappointed with what he did.
Really?
Absolutely.
How do you know that?
How do I know that? Because he has played to the stock market from starting with his rookie year as chairman, going back to December of 2018 and saying he is going to increase interest rates several times in 2019. By Christmas, the market had cratered. January 4th of 2019, he said he is going to be very patient and actually cut rates several times. This is before COVID.
So you've got evidence, in your view, that you've seen him respond to what the stock market is doing and base his monetary policy on keeping the stock market?
Absolutely. And the way to justify that, Joe, is to say if the stock market falls, it would reflect a weakening of the economy, which means unemployment would go up. And therefore, in a sense, I wouldn't say that as chairman, but that's why I have to protect the stock market.
So there's a method to it. The wealth effect helps him accomplish his goal of having a strong economy.
But then it essentially puts you off your goal to keep inflation under control. That is where I think he is going to miss, and the inflation is going to increase.
The only thing I'll say to add to your point on that is that yesterday we had Dan Tarullo on, the former Fed official, who said that he thought it was leaked from the Fed that they were going to do this half 50 basis points instead of 25, that it was leaked from them because they didn't want the market to react badly, too, which plays into what Sri's saying.
Right. Yeah. The market would have reacted badly, Becky, to a 25 basis point cut. Now, here is the problem. They say now it is uncertain what's going to happen in the future. Do you have 50 basis points continuing or not? Yes, you have to, because the next time it's going to be 25, the market is going to back off. So you have to once you start feeding the market, there is no end to it, and he has to provide 50 basis points in the future, and I don't know how he's going to escape that.
Joe, that sounds like you say that there's going to be no end to it. It sounds like there's a bad end to things like this.
Yeah.
If you probably disagree with Sri on some of this.
A little bit, for this reason, right? I mean, if you take their dual mandate, right, of the jobs market and inflation, right, and we always talk about these annualized numbers, right, where inflation was from a year ago, where the jobs market was. If you just simply look at the last 3 months, the rolling 3-month average of the non-farm payroll, the jobs report, is 116,000 new jobs. That's half of where it was to start the year. It's again half of where it was the year before from that. So the jobs market is slowing down.
Those were jobs coming back from the pandemic, half of them, or people going back to work, basically.
But anywhere sub 100,000 jobs, which were dangerously close to stall speed there, is significant. And then flip over to inflation, right? So the PCE deflator, which is what the Fed cares about, that's their primary inflation gauge, the rolling 3-month average is 1.7%, below 2.5, below 2, the lower bound threshold, right? So the recent data, right, on both of those tells you that the Fed should go, needed to go, and then you had the bond market screaming at it, right? I mean, the 2 years at 355, basically, right? Fed funds is at 535. We walked in this week with the biggest difference between Fed funds and the 2-year that we've seen almost ever.
I mean, that makes it sound like if you're looking at the very recent data, that the Fed really did need to cut. And if that's the case, what we took away from Chair Powell's commentary is maybe not an accurate representation. If you think the economy's fine, jobless picture is fine, that's the thing that's hard to add up. Either things are bad and we needed 50 basis points cuts, or things are great and we maybe didn't. Which is the right answer? I
think the Fed, they had the confidence, and this was an insurance cut. If you look at the dot plots, right, they would tell you 50 more this year, 100 next year, or a better way to put it is 25 at every meeting until early 25, and then you skip a meeting and go 25 from there. But yes, the Fed did need to cut, and I think 50 was exactly the right call because of the economic data, right? I don't necessarily subscribe completely to the idea that the Fed is pandering to the stock market. I think it takes it into account as a variable, but I don't think it's the sole reason.
Becky, I think your question was spot on. If you look at the beginning of the press conference on Wednesday, and you heard him say that the economy is strong, the employment is being maintained, and if you just stopped short after the first 2 minutes of listening to him, you'd come out with the impression he's not going to change interest rates at all. He's going to let them be. And then you have the 50 basis point cut. There is a disjointed response here. And that's why I said to Joe that it is more a stock market related move rather than be related to what is going on. And then again, look, jobs wise, you're more than 100,000. Inflation is about target. Initial jobless claims are very low, subdued. Why are you cutting interest rates?